Excellent. Well, welcome everyone to today's webinar. Glad to be here again. It's always good to be a part of these events. We really enjoy being here. So thanks so much for having us again. Hey everyone, we're going to talk about in line with the sort of the feel and vibe of this event, and the theme is market structure like you've never seen before. So really, we're going to be taking a deep dive into market structure. So if structure is something that is new to you, or maybe still a little unclear, you're going to get a lot of clarity out of this event. So welcome and glad to be here. Before we dive in too deep, of course, we have our disclaimer, and this is Jim Simmons with Neural Street Trading Academy, by the way, and we have no financial interest in the outcome of your trades. We are here for products and services for educational purposes, and there is risk involved with trading, so please understand those risks. And we are presenting on behalf of NeuroStreet and Arc AI. Arc AI is a developer of algos and indicators, really great developer. We are a reseller of Arc products, and so we're going to be looking at one of their tools today because it lines up exactly with what we want to cover here. So just a quick agenda. We'll talk about, we've already done our intro. We'll talk about not so supportive support, how to turn the lights on, structure zones, supply and demand zones. Mostly we're going to be looking at structure zones today, but we'll touch briefly on some of these other zones that are available in this tool because it really does quite a bit. And then all-in-one automated support and resistance. Of course, a lot of chart time. We're going to spend a lot of time on the charts today. So buckle up. Here we go. So what's the major problem with support and resistance? Well, traders don't always know the difference between strong support versus weak support. Weak support is something that causes a reaction, and strong support is something that causes a reversal. We can see a small reaction at the weak resistance here on this chart. We can see that the market comes into weak resistance, bounces out, doesn't give much of a reaction, and actually goes right through it. And then we go to the next example, and we can see that there is strong support that is held down here and then ultimately rallies the market out. And we can tell where these weak and strong support areas are, and we're going to talk about how to identify those so that you can ultimately know once and for all where to draw your support and resistance. More importantly, you're going to need to know, how do you plot support before it happens versus seeing it after the fact? Because if you're seeing it after the fact, well, the market's already moved without you, and it's moved on, and it's on to bigger and better things, and you're still trying to keep up with the past, and so you gotta keep up, right? So the major problems with support and resistance is traders oftentimes aren't trading support and resistance correctly. They're using useless tools blindly for reversals and expecting the market to reverse. They're trading the same levels over and over and over, expecting the same reaction. By the time they figure it's support, they've already missed out. They trade support as if it's a number written in stone versus trading it as a zone. The market doesn't come into a level and just bounce off of a level to the tick every time. Usually it'll come into an area and then it will leave. Now, traders know they need support and resistance. You need to know what you're trading out of, and you need to know what you're trading into. Because if you don't know what you're trading into, I guarantee you're trading into a trap. You're trading into somebody who's waiting to just eat your lunch, and they'll all too happily do so. Traders couldn't find a solution. All right. And some of you can identify with this. I know I've been there before. You get to a point where you go, I just don't know what works for support and resistance. So I'm not going to plot it at all because I just don't know what to do. They don't maybe believe in their ability to plot levels. And maybe you think, well, I just don't know what I'm doing, so I'm just not going to do it. So we need someone to turn the lights on. So plotting support and resistance, it really, the way I can attribute it, it's like walking through a minefield at midnight. The only time anyone turns the lights on is when things blow up in your face. And we can see this in this example here, that we see an area here, and by time the market comes in here and bounces out, we go, oh yeah, okay, I see there's support here, and so we're expecting support here. And you're going, all right, we can get a trade location here. The market's oscillating, it's bouncing around. We've got opportunities to get long at these lows. Why wouldn't we expect that? The market's done it before. And then what happens is the market takes out your stop and your entry and goes on to take some of your lunch money. And so this is the problem with support and resistance, is that oftentimes by the time you figure it out, market's already moved on to bigger and better things. Now we have a tool that I'm going to be showcasing actually toward the end here. I'm going to show you more of the trading philosophy, the structure analysis first, and then we're going to take a look at what this tool can do. But this will plot support and resistance zones based on market structure. The best way that I've found to plot these zones is with Renko charts. I don't know how many of you are familiar or using Renko charts, but they're very, very, let me rephrase that. They're extremely helpful. When you're trading market structure, Renko charts are probably the best chart that I've seen that you can use to plot structure. Really, Renko charts are just very solid and smooth for being able to plot resistance and support and structure. So with that, we're going to go right to the charts. We're not going to waste any time. We're going to make the most of our time together here. And we're going to go in and we're going to take a look at the charts, and we're going to talk about market structure. So who here can tell me what market structure is? Yeah, Renko, you spelled it exactly right. R-E-N-K-O. Yeah, that's Renko. And who can tell me what market structure is? Somebody want to chime in on the chat box? What do you guys think? What is market structure? Anybody have some theory on that? We'll just get some participation here. You know, really what market structure is it is the highs and the lows of the market. It's the pivots. It's the wave theory. It's the zigzags. It's the ups and downs. It's yeah, it could be multi-time frame alignment, but really structure is all of this. This is all structure, highs and lows in the market. Now, if we go back to 101 here, and we go back to Elliott Wave theory, you've probably already seen this today, even because of the events, but we have Elliott Wave theory. All right, adios in Germany, and get some sleep. And we'll send the recording to you, no worries. So Elliott wave theory is to say that the market in theory moves in these waves, and we would have wave 1, wave 2, wave 3, wave 4, wave 5. And this is generally the idea here. But it's so much deeper than that, because we can see, let's say we have this coming into that. So this is our wave theory. This is our start of our wave. But we actually broke structure here. When we closed through the previous high, we broke structure. And so structure is whenever we make a higher high, structure is up. Whenever we make a lower low in price, structure is down. That's the simplified version. We're going to start there. So in this case, if this is our market coming in, this is our lower low here, structure was down at that point because we broke the prior low. Then what happens is the market rallies and it breaks through the other pivot right here and creates a higher high. Now at this point, as soon as we close above, our structure is now up for the market. And the best thing that we can do as traders is trade with the market structure, because we've all heard the trend is your friend to the end, right? And until it's done. And so if we could trade with the trend, whether it be on a higher time frame or on whatever time frame you want to use, it's best to trade with the market structure. And so here we have a lower low, higher high. I'm actually going to change colors just because this is kind of hard to see. And then we have a higher low. That's better. Then we have another higher high here. And then we have another higher low here and another higher high, and so on. So this is all market structure. This is all stuff that we need to know. And this is all stuff that we need to analyze in the market. So let's just take a look here. We don't know, we know this is a higher high, and we'll just say that because it closed above these highs. Then we come down and we're going here and we're going there. You know, we're not drawing all of our zigzags, but this is a lower high. This is a lower low. This is a lower low. So when we close below here, structure is down. Okay? Structure is down. When we do this kind of thing and we close above here, structure is now back to being up. And so we want to trade with this. This to the right here is a Renko chart. This to the left is a range chart, and it's just a 4-tick range. And this is on ES. Okay, these are both ES current contract, so on. Okay. So we have the range chart and the Renko chart, and we're seeing the structure. Well, the way that we want to identify our bias and our direction in the market is based on the structure. There are many different ways that you can go about determining what your directional bias is. We've seen them all before. You can use oscillators, you can use moving averages. Some of you have a fast average, and then you've got kind of the slow average, and then you've got an even slower average. And when your moving averages cross, you say, okay, my bias is to the upside. We're going to make it easier on you, and we're going to say that if you use structure to identify your directional bias, in my experience, from what I've seen, it proves to be the simplest and most efficient way to determine the market's direction. And I know that's an extremely bold statement, and I'm going to show you. Okay. So in this market structure, we have our wave theory, we have our higher lows to higher highs. That's the sign of a trend. Well, what about when you've got a lower low into a higher high? Then in this case, let's find one here. Let me get out of this and let's back up a little bit on the chart. And let's find a higher high to lower low. Here we go. So right here, we can see we've got, in this structure example, we've got higher high, lower or higher low, higher high, higher low, higher high. Typical trend, right? But then we go from higher high to lower low. And just for added benefit, and we will absolutely send you this recording, you can watch as many times as you need. This would be considered an outside leg, because we are going outside both sides of the leg. Okay, so it's a higher high to lower low would be considered an outside leg. And then, of course, we have our inside leg, which would go lower high to higher low. That would be considered an inside leg. Now, one fun fact, anytime you have a higher high into a lower low, let's just say if this was, we're just going to use this as an example. Let's say this is a higher high to a lower low, and then you get an inside leg. Prepare for that market to be an oscillating market for quite a while. And you can see this market is bouncing around in there as soon as they put that inside leg in there. And this is oftentimes the case. But so that's really everything we need to know as far as the higher highs, the lower lows. We've kind of covered everything there. Well, then we get into, let's go back to defining our bias as to direction of the market, because ultimately that's what we're after, is what is our direction and where is our support and resistance. I think that's pretty safe to say that's what most of us are after here. So let me expand this out a little bit. So we have, in these pivots, we have pivots that go on to break structure. Pivots that go on to break structure. This pivot did not break structure. This pivot went on to break structure. This pivot did not break structure. This pivot did not break structure. And I'm just going to identify all of these. This pivot went on to break structure. This pivot did not. Think of it this way. The job of this pivot is to go on and break structure. If it does not do that, these are going to be where we are going to find weak support or resistance versus strong support or resistance. Any area that is going to go on to break structure is going to give us a higher probability of providing support and resistance. So when we talk about weak versus strong, the weak does not break structure. So no break, okay, no break of structure. That would be considered weak support or resistance. The strong support or resistance would be what I would abbreviate as a structure breaking pivot. Structure breaking pivot is going to give us strong support or resistance. We can see that in the ups and downs of the markets, and you see it over and over and over again. And we're going to look at that and build a trading strategy around that, or you can trade literally with just this and nothing else, and you can do quite well with it, actually. So what we need to do as we are determining this market is we need to find our structure breaking pivots. Well, the first thing that we need to do, and the easiest way that I've found to do this, is find your higher high and then find the pivot before. Find your higher high and then find the pivot before. And we'll just put an X on these because we know that's the pivot. We have a lower low. Okay, this is a structure breaking pivot. We have a lower low. This is a structure breaking pivot. Okay. Does this apply to volume and regular candle bars? Absolutely. Yeah, absolutely it does. I'm going to show you toward the tail end how to plot this on Forex charts on a 5-minute chart. We'll even take a look at a volume chart here while we're at it today too. So yeah, you can use this. I think it works great, especially on Renkos for identifying levels and identifying structure, but you can use it on any chart to determine direction for sure. Works very well. Okay, so what we're going to do now is we're going to plot support and resistance around the strong structure breaking pivots. And what I'm going to do is just type notes on the chart so we can have that to refer back to. So we've got structure, if I can type, structure breaking pivots. Okay. So first thing we need to do is we need to find our structure breaking pivots, and we're just going to circle them. And now I'm going to start around 10-ish. Okay. From what I've found in trading the ES, it's best to wait until 10 o'clock time to trade setups on ES, just from what I found. Some of you might trade pre-market, that's fine. You can adapt this to what you're doing, or if you're trading later in the afternoon, it'll certainly cross over as well. But 9:30 to 10, I just steer clear. It's just too messy. All right, so what we need to do, so we're going to find our higher high. The pivot before is a structure breaking pivot. We have a lower or higher low, lower high, lower low. So we go from the lower low to the previous pivot. There's our structure breaking pivot. This one did not break. This one did. Everybody see that okay? We're just going to take our time with it. No need to be in a rush, you know. This is a structure breaking pivot because it went on to break the low. And then this was a structure breaking pivot because it broke this. Okay. This one went on to break. So this is a structure breaking pivot. This one was a pullback that went to break structure. Pullback, broke structure. Now we're in a trending look. This is our Elliott Wave theory. Broke the highs. That's another structure break pivot. In a Renko chart, I'm going to zoom in so you guys can see this a little better. Anytime you have a down bar followed by an up bar, I'm not counting that. That's just messy. I don't like to count that as a pullback. To me, those don't mean anything. As you can see in the Renko chart, for those of you maybe Renko charts are new to you, really what it is we have a continuation bar. And in this case, this is set to 8 ticks, okay? 8 ticks. And then the reversal bar is set to 16 ticks. Okay? And then there's an offset. The offset is, what it does is every time it opens a new bar, it offsets it off of the high of the previous bar, and that is 4 ticks. Okay, just so quick lesson on Rankos. Yeah, structure breaking pivots, you'll only be able to plot them after they occur because you need to see that they go on to break structure. And so the way that we're going to trade this is we're going to wait for the market to come back to that area, and we're going to use that as support and resistance. Okay. All right, so now this one each of these bars is 8 ticks. Yeah, it's an 8-tick brick. And if we zoom in, these are custom Renko bars. They do have the wicks programmed in as well. So you can use this for back testing and charting, and you can actually see what the market's doing. So yeah, Renko settings are going to be 8, 16, 4. Yeah, absolutely. No worries. 8, 16, 4. So 8 is the brick, 16 reversal, 4 offset. Yeah. So this we're not going to count as any structure because it's just a 1-bar flip, and it's just down and then up again. So that to me doesn't mean anything. So in that case, the pivot that we would need to break is still down here. So this pivot did not go on to break structure. This one did not break, did not break, did not break, barely broke the low, but it didn't close below this pivot. So I wouldn't really count that. I want to see that it goes on to break a pivot, which it does right here, but that's a 1-bar flip. So we're not going to count that. I know we're getting a little messy in here. Just bear with me on that. And then we'll keep going. Yeah, Matt, it's 8 ticks per bar. Yeah, so it'd be 2 points. 2 points. All right, so we go on to break this. So this would be a structure breaking pivot right here. This pivot did not go on to break, but this one did. So this is a structure breaking pivot. And then this one did not break, this one did. And then this one did, and so did this one. Okay, so now we have our structure breaking pivots highlighted. All good there. Making sense. Now what we need to identify is when the market breaks through a structure breaking pivot. This is deep dive stuff, so just bear with me, and you can, I'll get you notes and we'll get you videos and all that. But when market breaks the structure breaking pivot, we're just going to abbreviate that. Okay, let's do this. So we know structure breaking pivot. That's when the bias changes. So we have two sort of events. The structure break is whenever we break a previous pivot. Okay. So a structure break would be any break of any pivot. Okay, so if we break through a pivot, structure would change. So here, or it would be a structure break. Okay, so when we break through here, that is a structure break. When we break this pivot, that's a structure break. But our bias only changes. This is the important thing. Our bias only changes when the market, I'm going to move that down here because it's important. When the market breaks a structure breaking pivot, that's the only time our bias changes. So what this means is that at this point in time, at 9:40, our bias was to the downside because we were making lower lows. Our bias doesn't shift until we close above a structure breaking pivot. So in this case, our bias is still to the downside until we can break above a structure breaking pivot, which happens right here. Okay, so at this point, we are down. I'm going to draw an arrow because we're making lower lows. We change to an upward bias when we break through a structure breaking pivot, and that happens right here. At that point, that's when we shift to looking for longs, and notice how the market continues to trend for quite a while. And our bias doesn't shift until we break below a structure breaking pivot, which happens here. So now we are identifying in this market what our shifts is. And now you can see this gets a little choppy here because it changes directions a few times right in a row. So we go from up to down, and then we go back up, and then we go back down. And so it gets a little messy in there, but that's just how the market works. Sometimes it gets choppy, sometimes it you know, it gets a little noisy. It's being able to make sense of the noise that takes you to the next level as a trader. Being able to make sense of where to plot support and resistance, that's going to take you to the next level. Okay. Does this all make sense so far? Anybody have any questions so far? This is kind of like, it's weird. It can be complicated at first, but I can tell you this, if you can wrap your head around this, it will make massive, massive changes and improvements in your trading. Okay. So don't write it off. I know it sounds hard, but it just sounds harder than it is. Yeah. Yeah. All right, let's keep going forward. So now, how do you trade this? Okay, that is ultimately what we want to know. So if at this point in time, we're saying that our market bias is down, then it doesn't change to upside until here. So we're looking for shorts. So where do we find shorts? I'm going to show you. Bear with me here. I've got my recording that stopped because of my hotkeys. Start this back up again. Okay. No using hotkeys. All right. So what we're going to do here is we're going to plot some rectangles for support and resistance areas. Okay. So this is our structure breaking pivot. Anytime we have a structure breaking pivot, we know that is strong resistance, right? Because it went on, it did its job, it broke the low, it is strong resistance. Okay. Now we're going to go back. We're going to take a look at our chart here. We're going to go back to our 4 range chart, and we're going to look at things because this is going to give us a zoomed in view into what is happening in the price action. Okay. So here we went on to break structure. Here's our structure breaking pivot. This is our resistance. This is where the zone goes. Now, what I like to do as you're drawing these zones is I like to find, okay, here is where the price action took place. This is what caused the market to move and break the lows. So this is what we want to wrap our zone around. And so what I do is I just start a zone at the pivot area somewhere, just so I know where it's at. And then I go in to highlight all of the chop in here. And when we go into the 4 range, you can really see the chop in the market. Chop, 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 chop. And then it finally breaks and it goes right through the lows. Do you guys see that? There's the low. You can see it on both charts. So this is the zone that I want to trade. And notice what happens when it comes right back to that level and we get a trade opportunity there. Stop goes above the high. You can take profit at 0.5. You'll have a very, very, very high win percentage. If you want to take profit at a 1-to-1 risk reward, you're going to get great trading there too. But just bear in mind, if the market gets to 0.5 and doesn't go all the way, you might want to just bail on the trade and go break even. Okay. But we could take profit at 0.5. You could split it. You can do one entry at 0.5 target and the other entry at a 1-to-1, whatever you prefer. So that is the trade. So let's break this down. I'm going to write some notes and we'll identify the trading setup. Our first step was to find, there we go, find the structure breaking pivot. Okay, and we'll just put here SBP equals structure breaking pivot. Okay, step 1, find the structure breaking pivot. 2, we need to find our directional bias. How do we find directional bias? We need to find the break of a structure breaking pivot. And whatever direction it breaks, that's our bias. So we go here. If it breaks above, then we are looking for longs. If it breaks below, we are looking for shorts. Okay. Then step 3, Once we know our direction, we're going to plot support or resistance, depending on the direction, around the structure breaking pivot. Wait for the market to come back and trade out of resistance or support. Well, it sounds a lot easier when we type it out. All right, so those are the rules. That's really all there is to it. You want to trade only in the direction of the bias. That's it. Pretty simple. Pretty simple. Using candles in conjunction with Renkos. Yeah, it's just a 4 range. I'm just doing this so we can see it. That's all there is. This chart doesn't serve any sort of analytical bias or anything like that. Just using it so we can see the market. Yeah. Does this correlate with setting supply and demand zones? Absolutely. Yes, it does. Because if you think about it, for those of you who like to trade, it's based on supply and demand. I mean, we'll just call it what it is. It's ultimately based on supply and demand. Because if you've got, you know, market moving up here, well, what is this? Here, rally, base, drop. Isn't that supply and demand? Right? And you could call this distribution because the market's chopping around in there and then breaking. That's exactly why this works. It's on that basis. And when you pair it up with structure, it is good. Let's take a look at this. Did we break the structure breaking pivot? We did. We didn't close above it. But for those of you who are, I keep hitting my hotkeys. I just can't help myself. I love the hotkeys. If we can close above, then technically that is a structure breaking pivot, but or if we can get above it, it's a structure breaking pivot, but we didn't close above it. But notice there's still a killer trade here. There's still a great trade there. You could still take it. In this example, let's just assume we were more conservative and we didn't take that trade. And we were looking for, maybe we were still looking for shorts. Because we hadn't broken yet, and then you would be kind of looking for something in here ultimately. And there was a little bit of a reaction here if we go into that one, but you'd probably like to, you know, stick with the direction as it's breaking through here. And then ultimately when you're getting back into here, we've already traded this twice by that point. And this is something that you don't want to try and trade this one because we've already traded. Remember, we said traders are trying to trade resistance at the same areas over and over and over again. Well, it's only a matter of time. If you've already bounced out of it once, twice, 3 times, 4 times, I mean, how many times can we expect the market to do the same thing, right? So in this case, we are shifting now to the upside. And so let's take a look at some longs as an opportunity. We've got a zone, crying out loud. We've got a zone down here. I'm getting my hands off the keyboard, so I don't do that anymore. All right, so we've got a zone down here. And ultimately the market does come back to it eventually. We'll come back to that one. But we've also got zones at structure breaking pivots here. We've got a zone here. We've got a zone here. We've got a zone here. We don't have a zone here because that was not something we wanted to consider because it was a 1-bar flip. So if we go here, and then let's go back to our range chart so we can see the price action and we can sort of dial in our area. Let's zoom in here. Okay, so here is the first zone. And we can say that ultimately that's where the chop is, in that area somewhere. Okay, as the market comes in, there's our move out, but ultimately that's kind of where it chops around. We get a little chop in here, and that's where the zone is, and the trade is right here. And there's a quick target, 9 ticks. And then we have another zone right in this area. We'll kind of fine tune it there. We haven't hit it yet, We've got another zone that is presenting kind of in this area, really. There's kind of the chop, and then it ultimately breaks. And let's just see, that one didn't come back around. And this one hadn't triggered yet. Here's the trade. So over here, stop goes below the low. There's our zone. Another winning trade. Okay, so if we zoom in on just this chart for a minute, and let's take a look at it one more time. So there is the break. There's our trade coming back out of it. We broke through to the upside. Now we're looking for longs. So we're plotting support at the structure breaking pivots right here and here, and then we get a trade here, and we got a trade there. Let's keep going. We've got some noise in here. Well, how do you trade in the noise? 100 bucks with the ES Mini. Yeah, absolutely. And that's you could trade 2 contracts, you could trade 10 contracts, you could trade the micros, and it'd be 10 bucks, whatever your risk tolerance is. Is there anything wrong if you knew, and this is just a challenge to everybody, if you knew that you could walk away with 10 ticks a day on your first trade, if every trade you took in the first trade was up 10 ticks, would you take it? Would you take the 10 ticks and go about your day? I know I would, because you can take more contracts, you can add more to it, you can trade multiple accounts with prop firms if you choose. A lot of things you can do. Okay. What chart would be equal to 60 minutes? That's going to be a big time frame, and frankly, I don't know. This is going to be more like a 2 minute range, somewhere in there. Yeah. All right, let's keep going. So we've got some structure breaking pivots here, right? And our bias is to the long side until we break below this. So we're still on long bias. I'm not going to touch my keyboard. I'm going to draw a rectangle here. There we go. We'll just plot that whole thing, and then let's go back to our range chart so we can fine tune it. Yeah, this is not for swing trading. Definitely not for swing trading, though you could determine directional bias with it. You're just probably not going to want to trade this way. This is way too fast for swing trading, for sure. This is more of a scalper's approach, really. All right, so we have a zone here that we wrapped around this area. Let's fine tune it. Our chop is kind of right here. We've got some going down, and then we kind of bounce around off of this and then up. And there we go. Yeah, Renko is pure price action. You got it. Absolutely. And so here's the trade. There's a winning trade. And then even in the noise, we're still getting good trades. I'm going to delete this box just because we've already traded it and it's already noisy enough. And let's draw another zone because we have another one down here. And this is just to show that even in these noisy, choppy conditions, we're still getting good trades in this type of situation because we're trading with price action. We're trading with the market directional bias. Okay, so let's just say, all right, so this is our zone. Let's fine tune it. Really, you could go as low as here and you're still getting a trade out of that, or you could be aggressive and put it here. Either way, it's a profitable trade. There's the trade. There's another win. Well, now we have broken the lows, and so now we would be looking for short bias. Yeah. And so we would look at a couple different opportunities here. And we have a zone up in this area. Now, most of us are probably done trading by this time, but let's plot it out anyway. We've got a zone up in here. And let's see what happens there. That one doesn't work. That one doesn't like us. And why is that? Anybody want to chime in on that? How many times have we traded out of this area? 1, 2, 3, 4, 5. How many times can we expect the market to do the same thing? So this just goes back to when the market is getting noisy at certain locations, you don't want to keep trying to trade in that area. And I did that on purpose because I wanted to show that if you keep trying to force the issue, the market will keep you honest. And that's where the losses are coming from. So if you want to find the best trade locations, if you're a support and resistance trader, what is the best trade location that you can find? At the lows and at the highs. Those are going to be the best location for support resistance traders. Well, you can see if we zoom out, that resistance provided once, twice, three times, and this one gave us a good opportunity as well. So let's go back into this one, and we'll look at going counter directional even, which I would only do at the lowest low before the structure break. I don't want to get too much into this because we're just going to have 10 million things in our lesson today, and we won't be able to keep up. So here's where we're at on the lows, and you can see what happens here in the price action. Price comes down, chop, 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 finally comes back down, uses it as support, and then rallies out. So what could this be? Well, it's accumulation. Market comes down, accumulating of orders, rallying the market back out. Is that not supply and demand? Let's go all the way over to the bottom, and here's a trade opportunity right here. Now we're only getting 0.5 on it, but it's still a profitable trade. And if you trade this way, you can take a lot of profit on these 0.5 targets. They work over and over and over and over again to make your lives easier, because of course, after a complicated lesson like this, we need to try and simplify things. We have a tool, and the tool will provide these zones for you. So even though I've shown you how to do it, it does it for you. And not only that, it will only plot zones at structure breaking pivots. Isn't that wonderful? So we can see here, if we zoom forward, zoom ahead, okay, there's a trade. And I'm only showing, right now I'm only showing resistance. Is that supposed to be? Oh yeah, I have both. That's just because there's no support zones. They've all been broken through. Here's one. Support zone. Support zone. These are untested. Here's a zone. Provided a profitable trade. I mean, if I put all the zones on, you'll go cross-eyed because there's just way too many zones. And so what we can do in current market conditions, we don't have to have all the zones on. I'm going to go ahead and clear all the drawing tools. And you don't have to have broken and dead zones. You can see them if you want to. But if you're trading live with this, obviously you're just going to show fresh zones. And that's going to make things way easier because you can know exactly where support and resistance is. Now, let's say you don't want to trade this. You don't want to trade based on this type of a strategy. Well, we've just given you an in-depth view on how to plot support and resistance. We've also shown you where to look for support and resistance based on market structure. And if you're trading long, let's say in here somewhere, let's say you're trying to get long in here, you would know at that point that you have resistance in that area. And so that's going to keep you out of these type of conditions where you're going to be looking to short here or go long in there, and that can really help you in your trading as well. I promise those of you who trade Forex an example on Forex, and I'm going to show you that as well. Let's take a look at our friend Aussie dollar. Structure breaking pivot goes on to break. Market comes back up. We get a nice trade. This is a 5-minute chart on Aussie dollar. This is from today. Market comes down, puts in another structure breaking pivot here, chops around for a while, comes down. Comes right back in, nice trade out. Market goes in, puts in another structure breaking pivot. There's another trade short. Market comes back, structure breaking pivot, comes back, tests it as resistance. There's a nice trade there, and you could have caught it a second time. So when I tell you this works on any market, and it works on any market chart, it's 100% true. What you want to find the structure breaking pivots. That is your strong support and resistance. And When you break a structure breaking pivot, then that is when your bias changes. So let's go back to our rules. So you have it one more time, and then I'm going to continue on and we'll answer questions and so on. Oh, I got rid of my drawing tools. Let's do this. Okay, find your structure breaking pivots, find your directional bias. That's based on the break of a structure breaking pivot, plot support and resistance around the structure breaking pivots, and there you go. Okay. Market is a harsh teacher. I've been short dollar yen for 3 weeks. Uh-oh. Yeah, if you're trading swing on that. Let's just see what that looks like. Dollar yen. Not looking good today. Yeah, I hear you. But if you need help with these sort of things, reach out to us. We're happy to help. I'm going to put my email in the chat box as well right now, and then we're going to go back through some other factors in here, and then we'll close it out. All right, so we talked about support and resistance, market structure, but wait, there's more. The tool also plots supply and demand zones automatically. I would prefer a volume chart for supply and demand. We don't trade supply and demand on Renko charts. You're going to want to use a more traditional chart for that, like a volume or a time-based chart. But we have supply and demand zones, and they are good if you know how to trade them right. Order block zones. Anybody here trade order block zones? These are super, super good. When you trade them with directional bias, you can go nuts with these. It is solid, 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 solid. How do you get volume in Forex? You wouldn't. Yeah, you'd trade them on time-based charts. Yeah, you'd trade time-based charts. That was a 5-minute chart that I was looking at. So we've got order block zones. This is something that we trade in our trade room every day, and we have very, very strong winning results with these order block zones. All you have to do is just trade them with directional bias, and you're good to go. It's that simple. Now that you know how to find directional bias based on structure, you're golden. Trap zones, we also have trap zones if you want to trade these. These are good to know if you're trading into them. It's just good to know where that's at. Right? Supply and demand, it's just showing you the zones again. We already looked at, and here's some trade examples. These are some of our traders using this tool to take profitable trades. This is an order block trade. You can see the order block is right here based on this candle. And there it is. And there's another order block trade for profit. And there's another order block trade for profit. And there's more order block trades. This is this is a long. That is a long, yeah. And here's another order block trade, short. So our community is using this tool, taking a ton of really great winning trades. You can trade supply and demand with this. You can trade structure. You can trade order blocks. There's a lot you can really do with this. If you need additional help on this, please let us know. We are always happy to help out. I'm going to post the link in the chat box here so you all have it. There is a link. This is a special offer to buy this indicator and this tool, this software. You can get it for $9.97. Now it's half off. Normally $19.95. From what I've seen, if it's not the most robust zone indicator on the industry, it's one of them. It's right there with them. Really great tool. Like I say, a lot of our traders are using this with a ton of success. So I will open it up for questions at this point. Does anyone have any questions on the indicator, on the strategy, on the concepts, on anything at all? Anything at all? What do you guys think? Did you learn something? I know we went pretty deep in this lesson. We went like start to finish through market structure. This was a pretty deep lesson. We covered a lot. Any questions on anything? Crickets. You guys are awfully quiet. Awfully quiet here. Very helpful. Good. Good. What platform do, oh, good question. This indicator works on NinjaTrader 8. Yeah, doesn't work on any other platforms at this time, just Ninja 8. Well, thank you. I'm glad to hear it. I know some of the stuff I get a little nervous, with some of these events and that. I'm like, I just hope I can make it understandable. So if I've sufficiently confused you, feel free to reach out, by the way. Happy to help. Um, so awesome. I'm glad you got something out of this, and that's great. What broker do you use for Ninja with Forex? I believe, oh, let's look. Let me see. There's a couple that you can get on NinjaTrader. You know what? What I would do is just reach out to NinjaTrader directly, and they'll let you know which brokerages you can use in NinjaTrader. I can't think of them offhand, and it depends on where you're at too. If you're in the U.S. or overseas, you you get more options overseas. At least not in the U.S., I should say. Yeah. What type of training do you provide? We have a lot of education through NeuroStreet, is the educational uh, brand, if you will. And so NeuroStreet has a ton of education. NeuroStreet also has a prop trade program. So for those of you looking to pass, evals and that, we have a really great setup where we help traders pass the evaluations and get funded and stay funded. And we trade purely on the basis of trading multiple funded accounts. Our instructors are trading 10 funded accounts at the same time. So every time they take $100 trade, they're making $1,000 on that one little trade. And you can do the math. If you do that a few times a day, you're sitting real pretty. And a lot of our traders are doing this now. And so some of the stuff that I've shown you here is being used in our trade room, and we can dive deeper. And the more you see it, the easier it gets, just like anything, right? So a lot of training available. Yeah, definitely feel free to reach out and we'll get you info on that. Renko on the trading view doesn't plot the same, so it's only NinjaTrader. Yeah, Renko on trading view, I haven't really messed with it too much, but yeah, NinjaTrader lets us get ultra customized with our bar types and with our indicators, and it just gives us a lot of options, makes it easier from a coding standpoint. Yes, upgrades are always included. You pay for it once. That's what we believe in. Yeah, you don't have to pay anything extra down the line. So pay for it once, you get it on 2 PCs. So if you've got a laptop and a PC or something, you can have it on both, or if you want to share it with someone, that's fine. So awesome. Yeah, thanks for joining in, and glad you enjoyed it. Awesome. What else? Any other questions? When was the debut? This one was this year, maybe 6 months ago ish, something like that. Maybe 6 months ago. Yep. Let me link it again there too. Yep. There it is. Good. Yeah, it does a lot. It really does a lot. If you want to see more, reach out to us and I can give you some links to videos and so on, where it kind of goes over the indicator more in detail. Yeah, it's a really solid tool. You can build your entire strategy around this one indicator if you really want to. So good stuff. Good stuff. What else? Anybody else have any questions? What do you guys think? How many of you here are doing the prop firm thing, trying to get funded, or how many of you are currently funded, or in an eval, or anybody here doing that kind of thing right now? I know there's some pretty good Labor Day specials that are going on out there too. So take advantage of those if you are looking for them. What else? What else? How did everybody do trading today? Did you guys trade ES or crude, or how'd you guys do? I know I didn't get the chance to trade this morning. I was prepping for everybody today, so trading options. Okay. Yep. How are things looking in the options world? NQ. I know we took a couple trades on NQ in the trade room. Seemed to go well. So that's good. Yeah, good stuff. Long pound CAD. Nice. Very nice. Good liquidity. I would have loved to have traded the Aussie dollar today. That would have been a nice one. Are we getting back into the fall trading? Are we out of the woods on the summer trading at this point? I think we should be getting good volume at this point from now on. We're past Labor Day. It's go time, right? Should be able to get a lot of nice trades. Still paper trading. Do it as long as you can stand it until you can show a lot of profitable trades in the books, and a lot of consistency is really what you're looking for there. Don't yeah, definitely don't take it for granted. It is very helpful to your bank account. Many traders will attest to the fact that they wish that they had traded Sim a little bit longer. Vips and shops. All right. We'll have to take a look at those. Put them on the watch list. Good stuff. Anybody here trading crypto? Anybody here trade the crypto side of things? We've just started up our crypto leg. It just started up here this year, and been very, very exciting opportunities there as well. So keep an eye out on that. Yep. Reach out to us. Short from 48. Wow, you're sitting pretty on Bitcoin. Yeah. This one doesn't work on TradeStation. We do have some stuff on TradeStation. Yeah, good liquidity. All right, Maggie just joined us, Crypto Street. Welcome, Maggie. Glad to have you. It's been exciting. We're getting a lot of good activity in the Crypto Street world. Yeah. Crypto spreads, yeah, they can be pretty wide. Yeah, they can be pretty wide. I think we're only really swing trading in crypto just because of that. You know, you don't want to try and do too much, leave too much money on the table. Yeah, but we're doing some additional opportunities and passive income plays, a lot of good stuff going on. So very cool. Well, I think that's it for me then. Let me post my email in here one more time. If you do have questions, feel free to reach out, and then I'll post the link here one more time as well. And if you have questions, just reach out to us anytime. We're always happy to help. And David, thanks so much for having us again, and always great to be here.